Hi, it's Jim at Jimosophy. Today I want to talk to you about the effect that COVID, the worldwide pandemic, is going to have on Canadian real estate. Real estate's going to drop. It's going to drop big time. It's going to drop precipitously. Why hasn't it dropped yet? It hasn't dropped because of free money. The demand is there. It's had a huge run-up. There's nothing more overvalued in the world than Canadian real estate, in particular residential. What's fueled that demand from the early 2000s to today is immigration, the highest in the world in Canada, and low interest rates. You come into the country or you're new here, the first thing you do is head to a mortgage broker, a shadow lending institution, and borrow money to buy a house. They'll even lend you the down payment. People have purchased houses with credit cards as the down payment, bundled loans, combined mortgages. They're very prevalent. Interest rates are low, which means that you could actually buy a house cheaper than you could rent it, so no wonder they're going up in price. A 2% mortgage on $1 million be $20,000. It could cost you more than that in rent. COVID is a game changer. This worldwide pandemic is the shock to the economy that's going to bring down Canadian housing prices because it's caused massive unemployment, and not just temporary but structural, because a lot of these people won't be recalled back to work. There's 8 million Canadians that receive a government benefit of $500 a week for free, which are going to be moved to unemployment. That should cut it in half for those that qualify. And there's only 18.9 million people that participate in the labor force in Canada, while 8 million people are getting free money. So it's no wonder that housing is accelerating even more, because the income levels are there. Some people are making more money than ever, and bidding wars are back, even though it's the most overpriced market in the world, where an average house would cost you $1 million Canadian in the Greater Toronto area, which is where a quarter of Canadians live. You also have 20% of Canadians that have deferred their mortgages, so they're simply not paying them during the pandemic. They're going to have to pay them. They're going to have to pay them back with interest. They're not going to be forgiven. So you have deferred mortgages, you have massive unemployment, and you have extremely low immigration, which was driving the market. People are simply not coming into the country because of COVID. They're not allowed in. And so the immigration levels, which have really fueled high housing prices and lax lending standards, is gone because of the pandemic. Real wages in Canada that people use to buy things with and to pay off their mortgages have actually dropped over the past 25 years. So incomes have dropped, but of course the free money has fueled a new boom. So you have low wages, you have extremely high housing prices, you have high unemployment, you have deferred mortgages, you have low immigration, you have an overvalued market, one of the most overvalued in the world. You also have Canadians with record levels of debt, the most indebted people in the world. It's like a perfect storm. I would recommend that you sell Canadian real estate, get a quick closing date, get out of that market. It's going to crash, and it's probably going to crash hard. The head of the CDIC, the head of the CMHC have told you so. They're not stupid people. They know. They're telling you. It hasn't happened. We haven't seen a correction in Canadian real estate since 1989 to 1995. So most people in Canada don't remember the last correction, or simply did not live in Canada when there was a correction. But things don't go up forever. We always get an economic shock that brings us back to reality. And you want to target the most overvalued markets for the biggest effect coming out of the economic shock, the pandemic. You can read about this on Jimosophy.com. Thanks for listening.